Welcome back, family. Sonia here. If you're new, please don't forget to subscribe. So imagine finally finding your dream home or the home you love. You've made a bid and your offer has been accepted. You've done an inspection and your inspection came in well, and in your mind you're picturing, oh my god, when is my moving day going to be? And then this happens. Your appraiser comes in and comes in lower than the actual agreed upon price between you, the buyer, and the seller. Okay, this moment can actually cause panic for both the seller and the buyer, but know that what you have to keep in mind is a low appraiser doesn't automatically kill the deal. I repeat, a low appraiser doesn't automatically kill the deal. Okay, so today we will learn on what it actually means when an appraiser comes in low, what happens next, what are the options for a buyer and a seller, and how can you make smart decisions without overpaying or rushing. Okay, so because an appraiser is often misunderstood, let's start with it. An appraiser is an independent estimate of a home's market value, and it's often ordered by a lender. And the deal here is not to protect the buyer or the seller, is to protect they themselves, the lender. Okay, so don't think that, oh my god, this appraiser is going to favor the seller or the buyer. No, that's not the purpose for an appraiser. Okay, the lender wants to make sure that the home's worth is what they're actually going to be giving you the money for, if you get what I'm saying. So they want to make sure that if I'm borrowing this buyer $350,000 to buy a home from this seller, the home is worth $350,000. Okay, that's simple. So if an appraiser comes in low, the lender will be like, oh my god, that means this is a risk. The risk in this house is a little bit increased than what I'm already thinking I'm gonna bear. So it just gives them a signal. It's not, doesn't mean that the house is bad or the seller overpriced or stuff like that. Okay, it just means that the lender is definitely going to be giving you, the buyer, whatever the appraiser came out or turned out to be. What would you think a low appraiser is? Okay, what is a low appraiser? You might be asking yourself this question. Okay, and a low appraiser just means that the appraiser believes that the home is worth less than the agreed purchase price. So let me give you an example here. Let's say buyer A and seller A agrees to the purchase price of a home for $400,000, and an appraiser came in for $375,000. So the difference between the agreed price, which is 400, and whatever came in as an appraiser price or the home's value, it's 375. So the difference is 25,000 here. Okay, so that's just an example of what a low appraiser means. All right, and like I just mentioned, it doesn't mean that the house is bad. It just means that the house for the appraiser, or when appraised, is just worth 375,000 instead of 400,000 that the buyer and the seller already agreed upon. Remember that this appraiser had already come in. It only comes in after the buyer had made their offer and the seller is, oh, like, yeah, I'm okay for you to pay me that 400,000 and I sell you the house and I move out. Okay, so why would you think an appraiser will come in low? Well, what are some of the things that can make an appraiser come in low? An appraiser can come in low sometimes because comparable homes were sold for less, or whatever homes they used to compare that house you're actually going to buy is sold for less. The market is shifting. The contract price was aggressive. The recent sales don't support the value of the house. Okay, and the appraiser was conservative. But keep in mind that rising markets actually don't always tell the whole story, in the sense that most appraisers might lag behind the rising market. So just because the prices are high, or sometimes when you in the process of buying your home, the home prices just keep going up, but it doesn't mean that the appraisal value is going to keep following the rising prices. Okay, so it might still come in low, and at this point, that is where the problem lies. Okay, the problem and the negotiation actually begins at this time, when an appraiser comes in lower than the expected purchase price. Okay, and that brings us to what does not actually happen automatically. Okay, so let me clear some of the fears here. Just because an appraiser came in low doesn't mean you should call off buying that house. It doesn't mean the deal is automatically cancelled. It doesn't mean that you should walk away immediately. It doesn't even mean that the seller is wrong. And equally doesn't mean that you as a buyer should overpay at this point. There are options, and that is what we are about to talk about right now. What are the options you as a buyer has in a situation like this? The first option you're gonna actually have is negotiation. Let me slow down on this negotiation. You can ask the seller as the buyer to match the market value or the appraisal value. It's the same thing. Match the appraisal value that came in. So in the case of the example we just gave, instead of you paying the 400,000, you're asking the seller to actually bring down the price to 375, which the appraiser came in for. Keep in mind, this only works if or when the seller wants to close on the house. Okay, so you need to know you know what I'm saying, like, know the timing before you make some of these kind of suggestions. Okay, and just make sure that you're gonna have an open hand before you tell the seller, oh, you gotta bring down the price to the appraisal value. Okay, if you want to win in this kind of with this option, you equally have to know that if you walk away, the next buyer might equally go through the same thing. Meaning, if you walk away, the next buyer might equally have a low appraiser as you just did. So if you know that, you can use that as leverage toward negotiating toward the seller. Okay, and if you think the market is cooling down, you can use this option of telling the seller, hey, please bring down the price to the appraised value. Okay, another option you have is splitting the difference. And splitting the difference just simply means the seller and the buyer agree to meet in the middle. In the middle doesn't mean 50-50. It depends on what you guys agree. You guys can agree on 60-50%, 50-50%. But let me give you an example in case you agree on a 50-50%. Okay, if you agree on a 50-50, that means, let's use the example I already just gave, 400 for the purchase price and 375,000 for the appraisal value. So the difference is 25. Okay, 25,000. So if you guys agree to meet in the middle of 25,000, because that is what is left, then that means the buyer will have to bring 12,500 and the seller 12,500. So the seller can decide and say, okay, since I'm the one selling the house, I'm gonna bring down the price to 387,500. So you bring 12,500 as we close. Okay, so as we make closing arrangements, you have to bring that extra 12,500 if you guys agree on a split. And another option is increasing the down payment. Buyers, come closer. Just because you have the money to increase the down payment doesn't mean you should. Please keep that in mind. Just because you have the money doesn't mean you should make the down payment. You should think of what this decision of making that increased down payment is going to cost you. Okay, it might look just immediate, but hey, this is going to affect you down the line, because by the time you want to sell the house, you're going to want to get back that money from whoever is going to be buying. Okay, so you have to keep that in mind before you make this. But I mean, it's another option if you want to. You just have to be more cautious and think of your decision before you carry out that extra down payment. Okay, so let me talk about something very important as well, which is the appraisal contingency. You're only gonna have to do this way at the beginning. Okay, you don't wait until your appraisal comes in low and then you start thinking of an appraisal contingency. So my fellow viewers, if you are in the process of buying a house, as you're placing that bid, make sure you have an appraisal contingency in your bid, okay, in your documents, so that something like this happens, you're covered. Okay, what does an appraisal contingency do for us? It usually protects the buyer, and the buyer can actually walk away without penalties for those that have it. For those that don't have, well, you may be losing your earnest money, and negotiation may become more complex than you actually think. Okay, so do ourselves a favor and get that appraisal contingency in our bidding. So when they're accepting our offer, they know we have one. So if something like this happens, we can think of our options. Okay, it's just it's protection for us, the buyers. So we don't have to start thinking, oh my God, am I going to lose my earnest money? Can I walk away without getting any penalty? You know, protect yourself. Okay, and this is very important. And please, before I continue, this video is for educational purposes only. Okay, so now, do you think you can actually challenge an appraiser? And the short answer is yes, but it must be done properly. Okay, a reconsideration of value can be done or can be requested if strong comparable sales were missed. If you think, after looking at your appraiser, if you think that, oh no, not thinking, if the data shows that the strong comparable sales were missed, if data error actually exists on the appraisal form, if the recent upgrades in the house weren't considered, or incorrect, like stuff like incorrect square footages or wrong bedroom and bath counts. Okay, so if this actually shows, it's not emotionally, it's making sure you have the correct data, so you can actually request for it. And can buyers and sellers request for it? No, you cannot. But you can go to your lender and tell your lender, this is what I found out while looking at this appraisal that came in. Okay, I realized with your data in hand, you realize that the comparable sales, when some of these were missed, the data is not correct. As you're telling them, you make sure you have proof. Okay, make sure you have proof to show them that this is incorrect. So a buyer and a seller cannot just go ahead and request for one, but they can go to their lenders, because guess what, the lender actually requested for this appraiser. So the lender can now say, okay, let me see what this buyer or seller is talking about, and they can actually challenge a low appraiser. Okay, so keep that in mind. Okay, and like I said, it's not emotional, it's making sure that you have the right data before you go out there requesting for one or trying to challenge one. All right, so we've talked about buyer. Let's talk about what the seller should understand at this point. What should the seller understand when an appraiser comes in low? The seller needs to understand that anybody that is going to be financed is definitely affected. So anyone that is actually going to be financed will be affected, regardless of it's a bank that is financing them or a mortgage lender or some other party. They're going to be affected. Okay, and before you tell buyer A no, know that buyer B can equally face the same issue. So keep that in mind. So if you tell buyer, hey, no, I'm not going to sell you, or your appraiser, whoever your lender is made this appraiser came in low, or whoever they choose did not do the job, I don't mind if you walk away. I'm going to give your owner's money back. Know that whoever can be coming behind can equally face the same issue, okay? And refusing to negotiate can delay the sale of the house. And sellers, come closer. Wait. Make sure you make sure you weigh and know that, hey, there is time here. The market condition can change if this doesn't work out, and the probability of you releasing the house back in the market could be high if this person walks away, okay? So please keep that in mind before, you say, no, I don't want it. That way you can know how to negotiate, okay? The key here is not just telling the seller, no, I'm not going to sell. The key here is negotiating, but make sure you weigh these three things: the time, the market condition, and the possibility of releasing. That way you can know how to better negotiate with the buyer. All right. And when should walking away be a smart decision for you, the buyer? I said at the beginning that you shouldn't walk away immediately, but it doesn't mean you cannot walk away at all, okay? So you've talked about the options, which is with the other person, which is the seller, and maybe it didn't work out, okay? Maybe you think that, oh, the seller is not meeting you where they have to meet you, okay? Now, when is walking away a smart move? Walking away can be a smart move for you, the buyer, if the gap is large, the buyer is overstretching their budget or finances, the market is uncertain, and financial safety is at risk, okay? Paying more for a home that is not what's today can limit your future flexibility, all right? So keep that in mind, and don't forget about the long-term effect of overpaying. And this is actually often overlooked, but we forget that buying a house is going to take us, especially for those who actually go through a mortgage, okay, or a mortgage lender, a bank, or for anybody that is going to be doing a mortgage, okay? It takes some of us 15 years, some of us 20, some of us 30, depending on how much or how long your loan term is. But it's not a thing of today, tomorrow, in a year, 2 or 5 years. That's a little long time, okay? Maybe 15, 20, 30, like I just mentioned. So think about the long-term impact of you overpaying or making that payments today. It's going to hunt you down the line, okay? So what can be affected if you make payments in the long run? So stuff like your equity growth can be affected. Your refinancing options can be impacted as well. Selling the house later can actually be impacted, and financial stress. So please, it's not a win the deal situation. It's being able to buy a house responsibly that matters, okay? How can you reduce the risks of an appraiser before you make any offer? You can, you as a buyer can do yourself a favor and review the comparable sales in that area where you're actually going to be making that bid, okay? Avoid emotional bidding. And the reason why I say avoid emotional bidding simply means don't go bidding. Sometimes, let me give you an example. Sometimes, well, we've been in the market for so long, okay? It takes some people years to actually get the house they want, and the simple reason is, it's not that they are not looking for it, it's that you see a house, you make a bid, you get rejected, you go to the next one, you bid, you get rejected, you go to another one, you bid, you get rejected. So sometimes by the time you're getting to that one house that they're actually going to accept you, you're already so emotional about, oh my God, I just want to get over it. I want to finish with this house process. It's been so long. I'm so ready to move in, stuff like that. So you bid emotionally, you want to be the highest bidder, you want to be able to get this house at all costs. Okay, so please, it's stressful, yes, but you still have to not put so much emotions in bidding the house. Okay, and make sure you equally understand the market trend and keep your finances flexible. Okay, strongest offer doesn't always mean overpaying, it just means that you have to be strategic. Okay, so let me do a little recap on this video so we can touch on the key points before we call it off. So if an appraiser comes in low, the deal is not automatically killed. Negotiation is normal, and that is just one of the options. You have several options out there. Option of exit is there as well if things come not the way you want it. Okay, and rushing to buy or overpaying is risky, so you have to weigh these options before you do that. All right, the best decision is the one that actually protects your long-term financial goals, not just today's emotions. So beware of getting so emotional in case something like this happen. You don't have to overpay, you just have to know how to handle it and handle it well, because your financial flexibility in the long run is going to be affected as well. The decisions you make today is going to surely wait for you 30 years, 15 years, or maybe you just decide to sell the house after a couple of years of using it. Okay, that is going to be affected as well. Okay, so if this video actually helps you understand what really happens when an appraiser comes in low, please don't forget to like, drop a comment in the comment section, subscribe for more videos on real estate and finance as well, and don't forget to share my videos. Stay safe and healthy, and thank you.